But on that note, let's welcome in our guest joining us on the show, Jay Gupta, Moneylicious Capital and Advisory, joining in the studio. Jay, very good to have you on the show as always. What is the reading of the market that you have at this point? Because this is a very tricky environment. Every time we see any signs of resilience, we see pressure like today, and finally the market giving up the gains that we were seeing throughout the course of the day. And of course, add to the fact that we've already been having very volatile moves, and this is again expiry week that we're dealing with here. What is your expectation as we go into the rest of the week?
I think, markets cracked on the last moment because there were a couple of, results which came in. Kansai Nerolac posted a bad result, then persistent numbers were not good. Okay, so that again, the liquidity pressure, the fear of liquidity crisis still remains. Although we have seen some kind of, positive news flow coming from larger names like Indiabulls Housing. So what was holding in the market was the big names in the NBFC and banking space, which do not have a liquidity issue going forward, like the likes of SBI, HDFC Bank. They were the ones leading from the front, and ICICI Bank. So now what is happening is market is below all the technical levels. It tried to breach say 10,670 last week, but it didn't. Was not able to do that. So today's fall gives a kind of signal that we may have 10,000 levels seen before the expiry. So again, it's like, you have to be sector specific. You have to pick stocks well. You cannot bet broadly on the index as of now. Once the rollover happens, then we have to analyze how the rollover is happening, what kind of rollover percentages are there. Then probably we may take a call, but the short term, broadly the market looks weak.
Absolutely, no doubt about it. Broadly, the market does look weak, and we can't, like Jay is saying, rule out that 10,000 mark on the Nifty. But let's start with some of the good news then, and that definitely was an Indiabulls Housing Finance after the kind of slide that we saw last week. Today, we closed out with very positive gains, up about 9%. In fact, by the time we closed out, some news flow on the front of, in terms of reports suggesting that Indiabulls Housing Finance is looking to offload some or all of its stake in a UK-based company, Oak North, and that they have about an 18.7% stake in that company. Add to that the kind of positive traction that we did see, a bit of a rebound coming in for NBFCs across the board. But Jay, what did you make of the kind of move we saw in Indiabulls? Because it seems like a pullback. Do you think it's temporary? Do you think that the tide is finally turning and people are starting to differentiate between the NBFCs and the housing finance companies that have been selling off?
So Indiabulls Housing was always a quality name, so there were concerns which had come up, but the way the management has come up, they have made presentations to the larger investors, right. And what we could read from that is that the loan to book value ratio is only 43%, and the stake sale which is happening there, the Indiabulls is going to make, I think, 2-3 times of the profits. And the numbers are not bad. The stock you are getting at almost 1.5 times of book value at around 650 odd levels. And I feel this for the companies like Indiabulls Housing or likes of HDFC, this kind of crisis is temporary because they have got a very book size where the loan is well disbursed and is well diversified. So I think the stock maybe if the market corrects further, we can see again a 650 rate coming. But I don't think there is much to worry about on Indiabulls Housing as a company side, because I think within say 2-3 months time we will be able to see around 850-900 levels again.
All right, so would you take this as an opportunity to be picking
up
the stock?
Yes, I will. If I get it tomorrow below 700, I would be keenly looking at buying the stock.
Okay, definitely.